Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 91 to 93 as the bull bear zone, and we were anticipating a directional move. At this point, we can see in the overnight session, the market held the 91 to 93, and that ended up being the launching point for a upside move. So that area is going to continue to serve as the bull bear zone, but at this point, ideally, we don't get a very deep pullback. So heading into the open, we have pre-market support 2102 to 2104. That is the aggressive spot for buyers to step in. Below that, we have 98 to 2100 as the initial support zone, and ideally, ES should hold above 98 to 2100 if we're going to get a upside continuation move and a test of 11.5 to 13.5. Now, looking at the other markets, they're trading near their short-term balance area highs, so they are at an inflection point. And in order for the S&P to maintain its strength and continue going higher, we would like to see a breakout in NASDAQ and TF. And if we start seeing some strong rejection in those markets, then of course we'll have to pull back and be a bit careful. Also have to understand that the S&P has been the stronger market compared to NQ and TF, and for the most part, it has been leading the other markets higher. And for that reason, we want to be careful on shorting ES today. Because right now, heading into the open, clearly the buy side is in firm control, and they can maintain that firm control above 98 to 2100. And really, at this point, we would have to see a break of 91.5 to 94.5 in order to shift that control from the buy side to the sell side. So, we can simply consolidate here, and even 2102 to 2104 has potential to hold for a move up to 11.5 to 13.5. Now, on the upside, we don't have to stop at 11.5 to 13.5. That is the upside objective and the primary upside target. But if NQ and TF start breaking out of their short-term balances, then ES does not have to stop at 11.5 to 13.5. At that point, it can even go up to 21.15, 16.5, and possibly even the 1775 to 1975 resistance zone, which also marks the all-time high. So as ES starts going higher, if the other markets are breaking out, then we're probably not going to get a whole lot of edge on the short side up there, and those zones should be used as profit targets on any long setups. And so for that reason, we're just going to be careful on the short side, be more aggressive on long setups. As long as we're not seeing an all-out failure and rejection in the other markets, the buyers can maintain control today. Now, the main economic reports are already out of the way, but the market is running on above average volume, so we can still get a decent range from here. The overnight low is 2092, and going up to 11.5 to 13.5 really would not be pushing any kind of range extreme. We are trading in a higher volatility environment, and we've seen that on the 24-hour session, we've seen 30 to 32 point ranges at times. Now, that doesn't have to be the case today, but 11.5 to 13.5 would very much fall in line with the average range idea, and it wouldn't really be an anomaly or out of the norm. So that's very doable. A push up to 11.5 to 13.5 is very doable, but we can go even higher and test 15, 1650 and 1775 to 1975. Now, by that point, ES would be quite stretched, and since it's the all-time high, that is a zone that can cap the upside on the day time frame. But keep an eye on NQ and TF. Both those markets are trading near their short-term balance area highs, and if we're going to get a strong continuation move in the S&P, then we would like to see those other markets actually breaking out, and any pullbacks in the other markets also can be used as triggers to enter long in the S&P. So, if ES is pulling back to 98 to 2100 or even 2102, and NQ is pulling back towards the 44, 41 area, that can be used as a timing mechanism to get on board on the long side. Again, considering just the level of directional conviction we have seen in the overnight session, you don't want to see too deep of a pullback in order for that directional conviction to continue to remain in play. So 2098 to 2100 is really, the max pullback that we'd like to see. Ideally, 2102 holds, and from there we go up to 11.5 to 13.5 and possibly higher. So those are the main thoughts heading into the open. Let's see if the other markets can maintain this short-term strength and eventually actually break out. If that happens, we'll focus more on the long side, focus on the upside scenario. If we start seeing some very clear and obvious signs of a failure, which would be, very strong momentum on the downside and, just a very weakening advanced decline and the other markets really just all out failing, then of course, we're going to have to adapt and adjust our bias. But for now, heading into the open, the bias is bullish, the buyers are in control, and we'll be more aggressive on long side and very cautious on short setups, especially in the S&P. So let's see if the buy side can maintain control, and we'll take it from there.